Welcome to the presentation on the stock market bubble of 2018. We're going to be exploring the hypothesis that the stock market is inflated by the Federal Reserve, and possibly a year after the interest rate hikes, we're going to see a continuation of the downtrend the stock market, and we could possibly be going into a 2 year stock market bear market where it will be not profitable to invest in stocks for about 2 years. For more information on market analysis and cryptocurrency, please go to cheapestbitcoinprice.com. George Soros, billionaire tycoon: stock market bubbles don't grow out of thin air. They have a solid basis in reality, but reality as distorted by a misconception. Pretty much all the billionaire investors I ever come across will tell you the same thing. The market is clearly rigged. It's not a free market. It's clearly distorted by governments, largely by the central banks. Anywho, but when you know this information, we can profit. We don't need to be victims. So, the three main topics we're going to go over is that the stock market bubble is inflated by the Federal Reserve and low interest rates. We're already in a bear market for 2018. The bear market may continue for the rest of the year, but it could also recover for a short time before crashing again. Alternative investments is, of course, cryptocurrency and precious metals. So the stock market is inflated by the Federal Reserve balance sheet. The Federal Reserve buys up stocks over a couple of years, and then when it stops buying stocks, the market goes down. So the whole thing is just being inflated by central banks and large governments that like that sort of thing. So, as you can see by this graph, as the Federal Reserve increases its balance sheet of stocks and whatever the hell it buys, the stock market goes up with it. They are definitely related. So when the Federal Reserve stops buying stocks, the stock market will go down. And this is, I took this, my source is Bloomberg. This is, if you just go Google stock market bubble, this is something that people in mainstream financial world, they know that happens. It's not that much of a conspiracy because it's legal, and you can check it out yourself. And people are talking about it in the mainstream. So interest rates are going to increase this year and possibly next year, according to William Dudley, the Federal Reserve Bank of New York. The markets are seeing that 3 is possible, 4 is possible, but 5 or 6 seems to me is quite unlikely. So more interest rates are going to increase. And why is that important? Well, what are interest rates and how do they affect the market? Well, from Investopedia.com, a mainstream financial news source, interest rates, the cost someone pays for the use of someone else's money, tend to obsess the investment community and the financial media, and with good reason. So, when the interest rates go up, it is more expensive for banks to borrow money from the Federal Reserve. Less business spending can slow down the growth of a company, usually means the stock price takes a hit. The whole market, or the key indices such as the S&P 500 may go down. So when the interest rates go up, the large corporations have less money to spend, and the stock prices go down. The S&P 500 represents the top 500 corporations on the stock market, so it's kind of an indication of the likelihood of profiting from investing in stocks. There are of course some stocks that will continue to go up even if the rest of the market goes down. It's just kind of an indication of the overall market growth or decline. And of course, if you think a company is a good company and they are going to grow, well, you invest in just based on fundamentals. But generally speaking, there will be an overall decline in the growth of corporations, in particular American corporations. And while it's not obvious to everyone, the word corporation doesn't mean business. A corporation is a business. A business isn't necessarily a corporation. In order to sell stocks on the stock market, you need to be a corporation, but most businesses, of course, are not corporations and don't sell stocks. I can go into that more detail some other time, but some people kind of get confused on what a corporation is. So here we go. In this chart from strandsberryresearch.com, the interest rates have been going down for 30 years, and with it the stock market has been going up. And whenever there is a interest rate hike, shortly after the market goes down. It's roughly 2 years. It can be 3 years. It can be longer, but if the stock market goes down in a financial crisis, you can pretty much guarantee the Federal Reserve will step in. This kind of stock market cycle happens roughly every 10 years, sometimes less, sometimes 7. We all know it's going to happen in advance, and usually there's a panic and people completely forget that we did this before. Quite recently, a few times in my lifetime, people completely forget, and they usually start scapegoating people that have nothing to do with the situation, and the size of governments expand, and our ability to earn money using dollars and stock markets and banks and mortgages decreases. Anywho, all those things I just mentioned are a video on themselves. So let's look at the live chart for the S&P 500. So if we're looking at the daily chart here, and this video I'm making, you can watch it again and again over the next 2 years. It will be the information will be valid except for of course the daily chart. So this is just showing you how I read it. I'm going to start off with talking about the positives. I'm a big fan of the MACD and the RSI. There is momentum has been building up for the past 2 weeks. Twice it came down and hit the 200-day moving average, which is kind of like the key moving average indicator for the S&P 500. However, we are still in a bear market. It doesn't matter if it goes up for 2 weeks or a month. We are still in a bear market. If it goes all the way up to this line and goes down again, it's an indication that it's going to go down. It's going to continue to go down. And if it goes below the 200-day moving average, that is a strong indication of a long-term bear market. So for most people, investing in the stock market is not the best idea. So looking at the monthly chart for the long term, again, this month has been stronger than the last two, but we are still in a downtrend. The stock market was oversold for the entire year. The RSI is in decline, little spike this month, but momentum is going down. So there could be a recovery in 2018. There could be. It could go over this line, but based on the fundamentals, it should go down fairly shortly. So we're still officially in a downtrend. And of course, if you can read charts and you understand finance, at the next point 2 years, there will be a good time to buy stocks. So, what are the alternatives to stocks that we can invest in? Well, traditionally, gold and silver are inverse to the stock market. You can pretty much invest in stocks at the bottom, sell at the top, buy gold and silver. Lots of people, you double your money over a couple of years by doing that. We can do that. I started learning how to read stocks and getting into finance investing through analyzing gold and silver. So let's look at gold. I'm only going to look at the monthly chart because it's a very its movements are like pretty much in like 7 or 8 year cycles. There was this during the financial crisis, the last one that started in 2018. 2008, 10 years ago, there was it more than tripled in value. It went down, hit here, and you can kind of see that the support level kind of matches the last peak, but it has been growing in value for a long time, and it has been gradually going up, let's say, for 2 to 3 years. So for a long term investments, I would say for me, I'm happy I have gold, and I will not be selling. I don't know for another 6 years if I do decide to sell. So if it reaches last peak, obviously we're making a 50% profit, which in the stock market world that is really good. But if you want to make multiples more, silver is better. Now silver follows a very similar pattern to gold. It's got this gradual increase. It's not increasing as much as gold is at the moment. It usually lags, but from $17 up to $49, you're talking about nearly 3 times the amount of profit if you were to invest in silver and it reaches peak. And of course, if it breaks those levels, profit more. So so gold is a safer bet than silver, but silver has more room for multiples, more profit. Particularly that in the past we valued gold because we could use gold is better than silver for making cups and things like that. It lasts longer, but silver is now used for electronics, and we actually have physically less silver than gold. So that would kind of make sense that in the future maybe silver will become valuable. But of course, the value of silver is a fraction of gold. Okay, gold and silver bars are easier to sell. Interesting coins can go up in value even in a downtrend. So when we buy gold and silver bars and we decide to sell them later on, it's much easier to sell in a shop or a gold and silver dealer if we're living in any city in Europe, America, the West, and most countries in the world. However, if we buy interesting coins, jewelry, and art, the value may continue to go up even if the value of gold and silver goes down. So I bought gold and silver coins before they went down. Some of my coins went down in value of gold and silver, and some of them continued to go up. So I still managed to make a profit even though the price of silver is a fraction of when I bought the coins. So for me, I buy gold and silver coins because they some of them you need to be good at finding, like silver pandas and the Irish ones are pretty good. So if you want to make even better profits than investing in gold and silver, obviously Bitcoin is the way to go. I made a pile of videos of Bitcoin uh, before the price before the downtrend. I made a video day before saying it was going to go down. I made a video here saying that the people investing at this point will never make a loss. It did then continue to go down. It never went as low. It never went below that point. And it's now broken out of the downtrend. Momentum RSI is suggesting that it will probably keep going up until July. And if you like, share, upvote, subscribe to my YouTube, Facebook, Twitter, and Steemit, I post up charts regularly on which cryptocurrencies are going up and down. Anywho, I believe, for me, I believe now is a good time to get the Bitcoin. I say it will most likely at least try to get to its previous peak. But I believe if you just look at the fundamentals of Bitcoin, I believe it is a good long-term project. And if you would like, if you don't have Bitcoin, you can buy $100 worth of Bitcoin and get an extra $10 free. I've got the cheapest Bitcoin price. I have videos, books, and links to services that I think are awesome. Now, other than Bitcoin, there's other blockchain technologies that are developing what we call smart contracts, and it's basically going to bring a decentralized internet, and the profit investing in them is going to be multiples more than investing in Bitcoin. Bitcoin is like digital gold, it's the safest bet, but there are other technologies you can invest in. I would recommend looking up the companies if you believe fundamentally they're a good idea, like I do with EOS. I've been making charts every time it has bottoms. I've been making charts saying, hey, I believe it's going to go up. I mean, the price here we're looking at is its price relative to Bitcoin, because it makes more sense to compare to Bitcoin in dollars. So here, and from here to here, it doubled in value since I started making the videos about it a month ago. And obviously last year I was also raising awareness. So it has reached here its previous peak. If it doesn't go past here, it could go down. But since I believe fundamentally that it is a good company, I have not sold my US. I'm just going to hodl. Waves is another great project. Broke out of its downtrend. MACD RSI showing that it's got more movement. It's above the 50-day moving average, which, let's just say for argument's sakes, maybe 50 days of profit. It doesn't exactly work out like that, but I think between now and July, or between now and the end of the year, it is a good project to invest in. Next one is ADA. Again, been posting videos about this whenever it's a good time to buy in an ADA. Broke out its downtrend a month ago. Didn't move up as fast as the US, but is moving up gradually above the 50-day move average. It now, the RSI is overbought, so either it'll go down or it'll go on an epic run. Since I fundamentally believe in the project and obviously bought at a much lower price, I'm happy just to hodl. And then Neo. Neo is more of a classic favorite. It's broken above the 50-day move average. It still has a broken average downtrend, but it is liked a lot in Asia and is referred to as the Chinese Ethereum. So they're my personal favorites: EOS, Waves, ADA, and Neo. That and gold and silver, I believe I will be a happy man. So, like, share, subscribe, upvote, whatevs. You'll get more market updates when I believe it's a good idea to invest in various projects. Maybe I'll invest in more projects, but I believe that I bought really low positions, and I don't really need to fiddle around with things anymore. Just check out cheapestbitcoinprice.com. If you don't have Bitcoin, you can buy $100 worth of Bitcoin and get $10 free. If you want to trade your Bitcoin for EOS waves at a Neo, I have a link there for Binance. And of course, if you want to buy books and tech analysis, check out cheapestbitcoinprice.com. I upload videos that pop up, links to offers, to media outlets that put things on, learn about blockchain technology, crypto trading, and crypto anarchy. And there are my recommended books. There you go. So, you can't say nobody warned you about the possible 2-year bear market that we're going to slowly move into. Live free or die trying.